So agriculture is just the mainstay of economy and also of employment. So it's inevitable that when we talk about economic development in this continent, we have to start first and foremost with how are we going to do this in agriculture to help transition our economies. So AGRA and the HRF partners traditionally have focused very strongly on how do we improve almost like the beginning of the agriculture value chains. We've looked at seed systems, we've looked at the introduction of new technologies on farm aggregation, how to strengthen and empower the farmer. And I think we have shifted in the past 10 years of looking at a more holistic approach, where we also look at what are the other service models like inclusive finance that are required in infrastructure to actually make agriculture value chains function. And of course the linkage to the processing sectors, all the way to the consumer market. Do we have an understanding of how consumer demand is developing? So how do we make agriculture more attractive? Many people active in agriculture almost have no choice in our farmers by default. And there's this whole concern about the fact that we're losing our youth and the interest that they have in agribusiness. And that's critical, because if we want agriculture to become and remain a driver, we have to invest across the value chain. At the HRF this year, we're doing a couple of things. We have, for example, a deal room, where we have mobilized out of a selection of almost 350 submissions, roughly 20 to 30 companies that are being matched and have conversations with potential investors. These are often funds, both within the continent and outside, who have a series of conversations and start exploring and identifying investment opportunities. It's definitely something that we want to expand, and we want to expand it beyond the bilateral conversations between companies on the one hand and investors. We also want to bring in the public investors, because if you want any investment in agriculture to thrive, you have to also invest in the enabling environment and in the infrastructure, being it whether it's irrigation, in roads, in electricity, etc. So the push behind all of this is to also ensure that we have a lot more alignment between public and private investment. And there have been a number of sessions across the event where we've touched upon that.
It's very fascinating listening to Strive, my CEO, of course, the chairman for AGRA, mentioning that we need to, I'm paraphrasing here, but he does allude to the fact that we need to change the idea of agriculture and make it more into a business, quote unquote, you know, away from maybe a social mandate that we did see in the past decades. When it comes to the partnership end of things, do you agree with this notion, or is it still maybe a more public meets a private kind of talk, or are you okay with this engagement of the business end of things and agriculture being bankable, being a business?
Agriculture as a business. I think that if we look at just the context of the dynamics on the continent, we have no choice. We're growing in population, we're urbanizing, we have to create employment, and we need to create food security. There is sustainability and scale in the private sector being involved. If for every public dollar that we invest into agriculture, being it in infrastructure, in roads, in some of the policy changes, we can leverage that and probably attract tenfold of private sector investment and even a greater amount of money. And I think that is the type of dialogue that we should be having here. How is it that our public money can actually help attract private investments? Because if you look at your traditional programs and projects that we're developing in either the NGO space or the public space, they usually have a 3 to 5 year horizon. When you're investing in a business, you need to have at least a 20-year horizon, and you want to work towards profitability. You have to work towards a certain level of efficiency. And I don't think that actually looking at business bites with looking at a social mandate. There is a win-win opportunity across the value chain. The challenge that a lot of private investors have in agriculture is the same challenge that many of our farmers have. People forget that, you know, farmers are private sector as well. They put their own equity and their own assets at risk in a very risky and complex environment. The challenge that many investors have is where are really the opportunities? And what are many of the risks, and who can actually assist in de-risking them? There's often also a big challenge in working together with smallholder farmers. And I think in terms of addressing many of these bottlenecks and these risks, it is inevitable, and it's quite important that public and private investors work together and they align. And that is one of the things that AGRA is also very keen and willing to champion. How can we make our efforts help de-risk investments, help provide seed funding, so that actually there can be a strong mobilization and leverage of a lot more private investments in agriculture.
It's very fascinating. You're hearing all these spots, and it's not just, well, you're also touching value chains and the whole spectrum, you know. 2016, AGRF, close to 30 billion was committed from partners, you know, big money actually.
Yes.
But fast forward to last year, 2017, AGRF, just over, what, 5-6 billion was committed. Still a lot of money here. But how do we bring the private sector? And I'm talking, it might sound like maybe the last question, but I'm talking more broadly when it comes to commitment and more engagement from the private end of things. How do we engage them more? Because we are seeing commitments from the public end, maybe development institutions too, maybe the agras of this world coming to the party. But when it comes to the private guys, it's really not there. How do we push them more? I mean, you're in charge of partnerships. I really want to hear your answer here.
I think, how do we push them more? And I think we even have to look at the type of language that we use when we're engaging with the private sector. If there is an opportunity, they will come and they will explore and they will put their money where the investment opportunities are. We've seen it this year with the deal room. You present, out of the filtering of more than 350 submissions, you filter the top 20, top 30, and you will have investors who are willing to fly over and sit here for 3 years in a room and explore each and every of these opportunities. It's really, are we coming with constructive solutions to some of the challenges that they are facing? The challenge in terms that our farmers are not aggregated, and basically it's highly risky to engage with a fragmented number of 1,000 farmers. Are we coming with a solution where we're saying we will support the consolidation of farmers, empowering and strengthening, building capacity, and also help create market linkages? We will help to build and strengthen our SMEs who have to provide important linkages in terms of post-harvest solutions, in terms of logistics, to make sure that there are more investments attracted to the private sector. We will work with our governments to ensure that the right policies are there in place and being implemented, that certain barriers such as export bans or import restrictions are being addressed, that basically prohibit or make investment less attractive. So I don't think that it's that difficult to attract the private sector if the opportunity is there, if some of the risks are being addressed, if some of the synergies are there. And this is not about pampering or actually over-subsidizing companies who in the end are also risk-taking enterprises. It's acknowledging that actually it requires a joint effort and almost like precision investment of our public funds